I'm bullish.
Let me into my zone. Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Yeah, April Fools. How clever, how creative. Jesus Christ, man. Sorry about that. But you know what? After having 3 cups of coffee in the morning and getting a little bit of bad news from the doctor, well, why not have a little bit of a laugh on April Fools? Anyways, I want to wish everyone well on this nice Tuesday or Thursday. No, it's it's Wednesday. Actually, it's Wednesday. Hey, have a happy Wednesday in your life. Wish you a happy Wednesday from actually kind of bright and sunny Helsinki, Finland, albeit cold as fuck. It will be snowing here relatively soon, is what I hear as well. So plenty to talk about on that, as we do have plenty to talk about on price action as well. The monthly close, and also I believe a couple other higher time frames closes as well. Going to really set in the long-term bias here, so we have much to discuss there. Fallout from yesterday's analysis, and really focus on the higher term time frames today. So with all of that said, I would like to wish you the best and the happiest, because I haven't been doing that for a while. Sorry, my bad. But it is more important to do that than really anything else, because why the fuck not, man? It probably helps, or at least it doesn't hurt. Anyways, more importantly, let's go talk about the Krown trading application, which can be found at app.krowntrading.net. It's free. Go take advantage of it. It is 100% for you. So anyways, well, also for me as well. I actually use this, which is why we made it. In fact, I found that's the best way to just go about life. Make stuff that you're actually going to use, and then other people might find it valuable as well. Anyways, once again, putting the big focus on the open interest for the global derivatives. We see open interest going up about 40 million since we last spoke yesterday, from about 570, 580 to 620 million as it is right now. And also seeing that the Bitcoin dominance more or less flat, not really saying anything there. The crypto fear and greed index also more or less flat as well, albeit pretty damn low in the low teens right now. But other than that, the big focus is here on the open interest, and we're going to tie this into the analysis once again. And my God, man, this has really been a big missing piece for, I feel like, myself looking at open interest. But now that we've finally been able to track this over time, we're going to be having a chart coming soon. I've been getting a lot of questions on when the chart comes. Oh, there, which is another million added. What could it be? Oh, it's all cells coming in right through here. Beautiful. But more importantly, we're working on it. It's going to be in the next update, but due to, well, the whole world situation and everything, some of the updates have been pushed back a little bit, just because, well, it's, there's a whole global pandemic going on right now. So with regards to that, open interest going up, price action, well, let's go see what happened over here. Definitely went up, right? Fuck! God damn it, man. Price action going down again. We see open interest going up, price action going down, volume having a little bit of a spiky spike here, but we're still caught in the context of the greater formation. So before we get into the lower term time frames, let's actually go back up here to the daily. And what do we know? The daily is still being held below the yellow 21 exponential moving average. Now, I just want to do a very small aside right here. This is incredibly similar to what we're seeing on traditional markets right here from a daily closing basis. We see a death cross. We see the 21 exponential moving average so far rejecting price action, and this is consistent with all major markets. We see Japan right on over here, same thing, having continuation. Could that mean something? We see Germany doing about the same thing yesterday, still being rejected. Well, I wouldn't necessarily call this rejection, but still being held below the 21. And with Japan kind of leading the way right now, I do believe that Bitcoin is likely setting up for a relatively similar move, probably popping back down below the $6,000 region. I see a lot of very bullish people in this market. I see a lot of very bearish people as well. So it is interesting, because I do feel like our reads on sentiment in this community are probably not very consistent with the general sentiment of the market. But I do try to do my rounds of crypto Twitter and crypto YouTube just to kind of catch up. And it does seem to me that most people are still kind of looking at this as likely to go back up to 8,000. Anyways, more importantly than that, we need to focus on the tangible things, not the intangible, like, bullshit that, well, everyone's bull. It's like, who's everyone? And if everyone's bullish and you're the only bearish one, then what does that even mean? I mean, it's I don't know, man. It seems like an ego thing to me, anyways. But it is interesting nonetheless. Anyways, looking at this right here, I still stick with what I've been saying for the last few days, or the last week or so, that as long as we're below the 21 exponential moving average, especially on an open and close basis, but even on just a closing basis as well, I'm not bullish here, and there's no April Fools about this. I am looking at this as more or less probably most likely coming back down Looking at the way that the monthly closed from yesterday night, I do believe that we closed well below the 21 exponential moving average, as that's all the way at 7,300-ish region. And hold up, Jesus Christ, man, looks like there's some weird things going on my computer right over there. But more importantly, we do see that we have actually crashed, or not crashed, but cracked down below the 21 exponential moving average on a confirmed monthly closing basis. So I want to spend a lot of time here on the monthly, as there's a lot to say. So first and foremost, as long as we are below the monthly 21 exponential moving average, this yellow moving average right here from a long-term basis, I am not bullish at all whatsoever. In fact, the better term would be bearish. I'm looking for more downside. You can see that in Bitcoin's history, especially if we go to the BLX index, the longest running exchange, or the longest running price action is not an exchange, obviously. But anytime that we've broken below the 21 exponential moving average, well, that's been death and decay for Bitcoin back on over here in 2014, 2015, more recently in 2018, 2019, and now we have it yet again in 2020. So this is something that I use in traditional markets when I was a market maker authorized trade on the floor of ARCA, which I would judge a stock if it was generally bullish or generally bearish over the long term. If it's above the 21, generally bullish, below, generally bearish. Works better with more mature assets, but now that Bitcoin's a little bit over 10 years old, I think that it has just enough time on it for this to work. And more importantly, we have a series of efficacious signals given from it. So my general view for the long term is I am not bullish at all whatsoever on Bitcoin price action as long as we are below that region, especially on a monthly closing basis. Doesn't mean that we can't come back up and test it. In fact, I think that could very easily happen now too. But I would probably be looking at that as likely an opportunity for a counter trend position. A counter position to that move. More importantly, I think that we can now say that it would be very, 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 very unlikely for Bitcoin to work its way back up to 8,000 or above 8,000 in this, at least in this next month of price action. And when we look at momentum oscillators, which actually let's look at the new ones right here because that one hasn't updated just yet. We do see monthly Stokes nosediving and more importantly gaining momentum to the downside right over here after getting rejected from the bullish control zone. Don't like that. Let's go check out monthly RSI. This one also problematic, but we didn't actually take as big of a nosedive as I would have expected here. So more importantly, with the monthly RSI, while it's definitely not a strong read or anything like that, we are still below the exponential. That exponential is working its way down to the neutral zone, although it's still going to take a few months to get there actually. But more importantly, if we actually do test around the bearish control zone once again, my big fear here is that we bounce on this 1, 2, 3, 4 times. The fifth time and in each subsequent try after that gets weaker and weaker. And the problem with this is that we're on the fifth time now. If we do actually come back down and test it, so if Bitcoin does break to the south side, let's call it below 5,000 now, that will likely bring monthly RSI below the bearish control zone. And I do believe that if that were to happen again, we'd very likely spend some time in there, like prolonged time. We've had too many warm welcomes and rejections from that region thus far. That really concerns me from a long-term perspective. Again, if we do get back down around there, but as it is right now, it's not necessarily there. But with the way that the monthly trend is quite literally down, we literally have a monthly downtrend. We have high, lower high, low, lower high, and while we haven't necessarily made a lower low just yet, I suppose that's the game that we get to play this month. Are we setting in a higher low or a lower low? If we set in a lower low, obviously below 3,300, we are in for our first monthly, not our first monthly downtrend, but likely a very long downtrend. And that's at the point where I'd say Bitcoin's probably not going to be popping back up to the 5 digits, at least for a few years. So still there is a little bit of hopium left for the long term. Just don't want to see a monthly close below our last major low right here at about 3,300, 3,500, depending upon where you're kind of measuring it from. But that gives us a big bad range right here because we're currently trading about 2x from that region. Anyways, also the monthly rounds of the accumulation distribution indicator, the net delta indicator, once again we are still maintaining this negative slope, and the slope of this indicator has accurately gotten pretty much all of the market cycles in Bitcoin's history pretty damn right. So with this remaining negative, or what I should say is just a downward slope, is also of course not good. But as we've seen in the past, do we have sharp terms every once in a while? Yes, we do, but there should be adequate warning before the next major low is put in. To put this in perspective, the last time that we had a slope change, obviously we got the one to the downside right here in January, but I just want to show that when the slope changes, we typically spend at least 1 month within that range still. and then turn around. So it needs a slope change, and then next month continuation. Boom, there you have a long-term reversal. As of recently, what we saw in January 2020. But what I really want to focus on here is actually the last major low that we put in January 2019 at about 3100ish region right here. So the slope changes from January to February, and then it just floats its way back upwards and onwards. The reason why that is significant here is because, again, it gives you a little bit of time, while that changes around, and obviously the general trend follows through massively to the upside soon after that. So even with a little bit of patience here and not getting in at the exact low at 3,300, but getting in maybe a little bit higher at about 3,900ish region, which I think is pretty damn reasonable. Not soon after that, we do see a move all the way up to about 10,000, or really like $14,000. So I just want to show that long term, this is a slow moving freight train, but once it gets going, those are the fun times. So could that happen here? Yes, it could happen. Could we see a slope change on the next one? Perhaps yes, but even then, I wouldn't just jump right in, because as we did say, it's gonna likely take some time to reverse itself. Now we do have a trend line forming here, to be fair. Does two touches make a trend? No, it does not. But if we do see this next touch actually turn around the slope coming into what's the month after April? June. No, May. It's May. I think it's May at least. Anyways, it doesn't matter what month it is, just the next month after whatever fucking month that we're in right now, because this one doesn't matter either. Time is an arbitrary concept. If we do see this turn back around, then that should be a good signal as well. But for right now, and at least for the foreseeable future, I am overall bearish, and I have no real reason to be bullish on this price action. I understand that people do want to be bullahs out there, and more power to you. But for the traders out there, well, that is a monthly, obviously not the most bullish look, and then we come back down to the 2-day, which I do consider a higher time frame on Bitcoin. And what do we see here? The same sort of death cross that we've been looking at for the last few ticks. And what do you know? We just got another tick confirmed, I believe, yesterday. Let me just confirm. Yes. Actually, no. Sorry, it did. This was the day before, but we will be confirming this next tick tonight at 8 p.m. Eastern time. And again, same thing here as well. We can rally all the way back up to the 21 exponential moving average, test around 70-50ish region. I think that would be completely fine even, but I'm still bearish as long as we're below the yellow 21 exponential moving average. And more importantly, we have the death cross, which is now starting to get a little bit of divergence away from each other on those two major moving averages right there. So what does that mean long term? Well, long term, we have a very good interrelationship between the death cross moving averages and then essentially the 21 exponential moving average. You could say to a lesser extent the 10 simple, but we'll kind of avoid that topic for right now, just for ease of conversation. Anyways, anytime that we've got the death cross or the golden cross, and then price action gets on the same side as a 21 as that cross, that's when we have big bad moves. Back on over here, we do see that we got the golden cross during this consolidation, about $7,000. Bitcoin comes back down, tests the 21. Nice buy right there, a couple times actually, right here. And then a 2x from 7,000 to 14,000, assuming that you bought on that region. Back in 2018, very similar relationship right on over here as well. Gets a death cross late in September or late in 2018. Then we slowly but surely get ground down below the yellow 21 exponential average. Now, here's the thing. Now, we do get a couple of closes above, but it's about on an open and closing basis. So you see that there's no opens and closes above that region. And then once it gets below the 21, we are trending down, and we are trending down pretty fucking hard all the way from top to bottom, about 52% move. Going all the way back before that for our next example, well, obviously this one is a beautiful one, going back to 2015, going all the way from like $250 to, well, a big number, a big number like 20,000 perhaps. And then 2014, we had another death cross as well, happening right over here. Do play out that trend a little bit, but because the cross was so far away, it wasn't really that big of a deal. And I do think that we could have something similar like this pop back up, where we do see another shakeout or another bull trap back up to the 55 or 200. But assuming that we're still remaining below that on a closing basis, I'd expect something like this to kind of curl back on over. And then as soon as we get back down below the 21 exponential moving average again, well, this looks familiar now, doesn't it? Hey, no, it doesn't, because I don't have my drawing tool out. There we go. About a nice on a closing basis, 55%. On a wick basis, obviously a lot more than that. but I'm more interested in closing basis right now. So, looking at price action right here, could we have another rally back up to, into the low 7,000s? I think that's possible, but there's a lot of overhead resistance in its way. So I wouldn't be looking for any sort of a major move into the $8,000 region. I do think it's possible we could have a move to $7,000, but I'd look at that again as an opportunity. Again, this is not financial advice, I'm not a financial advisor. And of course, when it comes to technical analysis, we are only using statistics in our favor over time. That is likely to produce a net positive result, but that doesn't mean that every time it's going to work out. But I do like the setups here, and it's good enough for me to put on risk if I do get that opportunity. Also, looking at 2-day momentum oscillators, we see 2-day Stokes starting to curl around a little bit. They're starting to get a little bit tired here as they approach the edge of the bearish control zone, which typically you are going to see some counter trend pressure at. Let me actually get rid of this right here because it's not relevant to what we're talking about now. And then we also have some, well, actually, we don't have any hidden bearish divergence here, or should I say continuation divergence. We certainly do, however, have it on the daily all the way back up to this $8,000 number right here. So that's going to be in the charts as long as, as long as we're below essentially like, what is this, like 8,100? No, it's actually about 7,950-ish region. So on a daily closing basis, that's always going to be a consideration there. Not only that, we do see daily Stokes curling back down, rejecting the bullish control zone and gaining momentum to the downside. Not good at all. Also, we do see daily RSI reject from getting out of the bearish control zone thus far, although this is probably the biggest hopium right here. We do actually have an inverted head and shoulders on daily RSI, and I put a lot more weight on formations in RSI than I do on price action, especially when it comes to the inverted head and shoulders variety. So yeah, if we did break back above the neutral zone, above the 50 marker right here, I would look for this to play out, but until that happens, it's still pressured down sooner rather than later. Again, that does still tie into the higher term time frame bias. Remember that this can take a long time to play out. So, if we did play that out, I'd look for that move to 7,300-ish region, we'll call it. And then I'd look for a quick rejection most likely as well. And then for all the higher term time frames to start to take on over again. Let's go check out the 12-hour. What's the 12-hour doing? 12-hour Stokes actually did point north and did cross up on the last tick. However, here's the thing. I think that this is likely to turn into a fake out. The reason why is because if we go over here to CMEs, we see something completely different. And the CME Stokes and the CME indicators in general have just been significantly more accurate than spot price action. And we got plenty of room here, plenty of room to the downside. And if we look at CME charts right here, there's some great symmetry here with coming back up, filling the gap about a day and a half ago, and thus far rejected below all major moving averages, even on a 12-hour, and of course on a daily as well as it stands. So so here's how I can kind of break it down a little bit. If we do take out the 30th of March's high, which was I think Monday, whatever day, it doesn't matter, the 30th of March, this guy right here at about 66.60. If we do take that out to the upside, I would look for an extension probably into those low $7,000 numbers. Yes, technically we do have resistance right around 6,800-ish region. So theoretically, I'd rather wait for like a 2-hour or a 4-hour deal to close above that region. And then target a move towards 72 to 7,300-ish region. But it's not really until we even get back above that hump where it even becomes, in my immediate short-term interpretation, I guess is the word that I'm going for. Anyways, while we are here on CMEs, we do see CME RSI is actually a couple degrees more bearish than what we see on spot price action. Significant hidden bearish divergence here all the way back up to the 9th of March when again Bitcoin was around $8,000, and this chart again looks actually several degrees more bearish than spot price action, and I do believe that CMEs are a lot more important. So again, short-term price action, this can ebb and flow. Of course, we could easily get a move up to 72 to 7,300-ish region, but I would look at that as an opportunity again. And again, it's not financial advice. I'm not a financial advisor, but I am just sharing my exact thoughts on these situations as they come about. 4-hour looks like we're kind of breaking down, rolling over once again. 4-hour looks like we're probably popping back down at 6,000-ish region, low 6,000. And I would kind of hold on to that idea as long as we are below 65.50-ish region. So maybe now's the time to get onto the lower term time frames. Let's go back to BitMexico. BitMexico is kind of tipping over as well. What could this be? Momentum losing to the downside. Oh, and is this the same trend line that we had plotted? Oh, I guess I already have it in there. Is this the same trend line that we had plotted out yesterday, providing the same resistance from the same last couple highs, 19th of March, 25th or 24th of March right here, and once again on the 30th of March? I think it might just be, and I do think that this is likely gonna end us back down to this blue box right here. So Bitcoin's short stint above the blue box right and over here, faded rather quickly. I think that's that this sell right here was a front run of this blue box and likely coming back down to the $6,000 mark, maybe even a little bit below into this blue box right here. That's where things get interesting once again. So let's now start to break down the lower term timeframes. Now there's a couple ways of doing this. I'm going to do this in the more conservative way because I think it's appropriate in this region, even though I do think you could probably aggressive traders here are going to be rewarded most likely. I didn't say that. I didn't say that. But hey, if we do take out either even taking out the last 4 hour low to the downside at 62.50, or especially if we close even a 2 hour dildo below 62.50ish region, the lower end of this blue box, and this is a more conservative way of doing it, I would target this move down around 59.50ish region. I would look for another bounce of this guy. But remember, that is the lower bound. That is actually going to be below the lower bound of this rising channel support that we've been playing off of ever since our low right on over here on the 12th of March, which, by the way, doesn't look right on a 4 hour, but will look proper on a 2 hour right here. And for all the multiples of that. So yeah, if we do come back down, obviously to about 61.50, do we have another short-term time frame bounce? Yes, maybe. I don't have a strong opinion on that, but I do think my strong opinion is that it'll just be a short-term time frame bounce as long as we remain below 63.50. I'd still say that that's pressure down, and we're likely to break this rising trend line right here as we come down to the next major blue box, or not even major blue box, but like a medium time frame relevant blue box, again in the 59, we'll just call it 5900ish region. If and when we do break this one, I would look for a nice shattering of price action all the way back down to 5500ish region. That's going to be the weekly 200 simple moon average, which probably does bounce it again as indicated by this nice blue box. And it's only because of the blue box that it bounces, not because of any other reason. No, of course not. This is not hocus pocus bullshit. It's just a nice area that generally people are going to be bidding on because of the nature of the 200 simple on the weekly. A lot of the higher term time frame traders are just going to have their bots and algos set to buy it. But seeing as we haven't necessarily broken this trend line just yet, initiated the measured move from this rising channel, I would proverbially put it around where it could break if it does happen today, and that would still be pointing us down towards a little bit higher than before, but about 42.50ish region on new lows. That would be interesting to me though, and I do think that there'd be bounces along the way, perhaps even it reverses along the way, but I'd be looking at this area right here, 55. I'd look at this area right here, 51, and I'd look at this area right here at 4,800. And then assuming that all those bounce attempts fail, I would look for a full-on return all the way back down here to 42.50. Why is that relevant? Well, because if we were to come all the way back down there, we likely would be creating bullish divergence on the daily by that point, as the daily RSI got so damn. It got pretty low, to be fair, but it didn't get into single digits, which I don't even think we've even seen, or maybe we have like a few times in Bitcoin's history. Yeah, we did actually over here. This was November 2018. One of the most intense moves to the downside that we've seen in this baby. So as it stands, this right here to me is like your classic fucking vertical move in a bear market, usually going to be a short squeeze. And I think that that's what we're seeing right here. The question to me, the question that I'm deliberating on right now is, do we get another move up to 7,300ish region and test there? Maybe, maybe not. I don't have a strong opinion on that. I only have a strong opinion on if we break 6,800 to the upside, then we probably will get it. But I'd still look at it as an opportunity. This is like fucking picture perfect, actually. Volume tailing off. We saw open interest go down the whole way as Bitcoin hit that area from like 1.5 billion with a B to a little bit over 600 million now. And as price action moves down from yesterday to today, and all the moves down that we've seen, we've actually seen that open interest go up. So that is just showing us that bears were closing their shorts, which likely caused this rise right here. So a little bit of a short squeeze on top of that for the over leveraged late to the trade traders. And now, as bears put back on their positions once again, they are in full control and they are running things. And I fear that this is going to take a long time for the Bitcoin hodlers out there, but it doesn't matter if you're hodling for life, because, well, it doesn't even matter anyways, because like you're just going to hold on to it till death. You're not going to, are you just going to look at pixels on your screen and stroke it? I don't know. Anyways, I don't understand that perspective, but if you are that person, if you are the person who is hashtag hodl till I die, I'm curious to know Why? Why? What's the purpose of that if you're not going to use it? And I sincerely mean that. I'm not trying to be what's the word I'm looking for? Patronizing or anything. I'm genuinely curious. What's the allure to that sort of position? Or is there any sort of, or is there any thought process behind it? I'm curious. Anyways, more importantly, if we do get that move back down to 4,200-ish region, then at that point, we likely will be making some bullish divergence on the daily. Why is that significant? Well, because Bitcoin's never bottomed ever on a major macro market cycle or even a major move without having bullish divergence on it, at the very least a daily dollar time frame. To put this in perspective, even on this major move right here, not a market cycle low, but a major move nonetheless, a multi-$1,000 move, $4,000 move to be exact, we had pretty massive bullish divergence off the 6,600 number right here. We had 3 drives right here before a $3,000 move. Bearish divergence on the top right here. It works both ways. And 3 drives of bullish divergence in 2018, 2019 on this 3,100 low over here. Several examples in 2018 on all these failed rally attempts. And we can go all the way back as well, but we've done this too many fucking times. You already know. For the newer people here, well, there's the long-term analysis video in in the long-term analysis playlist that you're more than welcome to view. Anyways, okay, alrighty. So what else do we want to look at? This video has already been 25 minutes long. How does that even happen? I don't know. But let's go back down to the lower term timeframes and let's start to look at probabilities with regards to these ranges. Let's keep in mind the ranges once again. So here, today's a little bit of a different day, right? Because technically speaking, I have this blue box as the next medium time frame actionable point, as well as this blue box to the upside, which has remained consistent at 6,800. I do, however, think that you probably could be aggressive if Bitcoin were to break 6,100-ish region or above the 30th of March's high at about 6,650, we'll call it. So we'll look at the probabilities of all of these for the lower term timeframes, but keep in mind that it's really this guy right here and technically this guy right here that are the big ones. Then on the outside peripheries for the higher term timeframes, 7,300 region, and then of course 5,500 is going to be our next major area to the downside. Although, well, I'd be skeptical of that one too. Anyways, let's just look at the probabilities as they are, as it stands. And this is on a daily, by the way. This is on a daily. So we do see that the first standard deviation is coming in right around 6,750 to the upside and 5,900 to the downside. So that pretty much accurately gets those actionable points to begin with. I'm saying 6,800 to the upside, so that'd be a little bit outside the top side range. And I'm saying 5,900 to the downside, so that'd be right on the edge of that precipice. So it'd be about a 16% chance that we actually do close below the bottom trigger point for today. Now, remember, that bottom trigger point is a little bit more of a conservative estimate. I do think that you could accurately put that at 6,100 and probably be right anyways, giving you a $200 leg up on that move. So that's obviously going to be well within those probabilities. If I had to do, some mental math, I'd imagine it's probably like 25%, which is high, which is quite high. By the same token, to the upside, it's going to be a little bit less than 16%. It's going to be more like less than 13% if I had to guess, but we can actually do this exact as it is. So with regards to that, let's go check them out. Whoops, wrong. I think I'm on the wrong one actually right now. Yep. Okay. All right. Where do my panels go? Hey, where are my panels? What the fuck? I swear I must have ticked something off because I was just looking at this earlier. Perhaps it's right here. Yeah, it should be right here at least. Yeah, we can do some single-sided targets. All right, so let's check out this. Let's check out this, and then where's my goddamn panel? Where's my panels? Where's my panels? Let's go to the downside. I'm gonna do 6,000. Just kind of like cut those two major areas to the middle, and let's see where the fuck is. I must have to like. Sir, it should be here. I don't have this. Oh, it actually shows the probability right there. That's kind of cool. Oh, okay. I thought that we'd have another pane there, but that's okay. Yeah, Bolly's actually been working on this quite a bit, so it is pretty damn cool to see. Anyways, it would suggest about that can't be right because that would be a 4% chance that we enter the downside. I'll have to actually check in with him because for whatever reason, we were just speaking before this video and it looks like my probability panel disappeared. Where? Hold on. It should show the position here. We got -40 and 100. Let's see what this one is, and we'll just put it right next to it. Okay, so -10 and 100. Okay, so maybe if we do like -20, get a little bit closer there. See if this works. Yeah, there it is. Oh man. All right, nice one. Anyways, okay, there we go. Okay, and that makes a lot more sense. 30. If we do use $6,000 level at as kind of like a mark to the middle for the downside, 30% chance. And this is by days and close. For the upside, I would still stick with 68 just because trend is against it right now. And bias is to the downside, so I'd rather be more conservative, even though probably 66.50 does get it. But let's see here. To the upside, 60. Hold on, that can't be right. 68. It's using. Well, why is it using a range? No, it should not be using range. Yeah, it's just using single side right now. It just says that. Okay, cool. That probability actually does not make sense. So I'm gonna have to talk to Bolly again because I think I'm using the wrong inputs here. Yeah, it should be on current time is 1. Okay, probably have a little bit of talking to do, but maybe we could use a different. Fuck it. I'll probably have to wait for this one, but we can still kind of eyeball it anyways, just because the top side of the first deviation is coming in at 67.50. It's going to be less than a 16% chance, so probably around 13% anyways for the upside. So interesting. I'll have to kind of talk that one out. Let me just make sure. Okay, that would not make sense, or maybe I'm looking at the wrong numbers here. No, I don't think so. Oh well, I'll figure this one out. Anyways, okay, cool. So with that in mind, I do still think, just generically looking at that, it does look to me like we probably are angled for the downside here. Again, from a probability standpoint, and just also from an underlying market dynamic standpoint, also from a structure standpoint, also just from, this is a very familiar move that we see quite often in bear, in these failed bear market rallies. Just a very vertical move up, and then momentum wanes. Anyways, is this a good time to go? Let's actually go check out CMEs right now as well. I'm curious if there's anything else different on this. Let's see how the monthly looks on this one. Obviously, the monthly looks like absolute dog shit. Not the picture of health and fitness there. Now, is it? Let's go check out a 2-day. 2-day is still held below the 10 simple. Looks like downwards pressure to me. And we could also use that as an actionable point as well. As long as the 2-day is below the 10 simple, I would not look for that next shakeout to the upside, the next squeeze to the upside. Now, if we do close above the 10 simple, at 60, it's basically at 65.50, 6600ish region, then I would look for a retest of the 21 all the way. Currently it's at around 7500, but I'd imagine that about the time that it actually does happen, it should be down around the 7300ish region. Now, more importantly, death cross is actually tentatively not confirmed right over here just yet, but it is in the works. Although I wouldn't necessarily trust the CME moving averages on this high of a time frame just yet, as it's too new. It needs a couple more years of price action. I mean, realistically, we haven't even had the 200 exponential moving average here for too long, as you can see. Just started in June 2019. But of course, gap boys rejoice, because your gap's gonna be filled, perhaps. And I'll leave that for the long-term analysis video. For right now, I think that kind of accurately covers up all that I want to say on the lower-term timeframes. Looking at 4-hour right here, we have the same sort of trend line as you can imagine as well. And I do believe that we're seeing this aggressively turn down once again. Let's go check out some of the other market leaders. Just make sure that the market more or less agrees with itself. Butyrol certainly a degree more weak, as we do see this one just kind of floating aimlessly sideways. Did not get the same sort of upwards move that Bitcoin did. If this one does have another move to the upside, I'd be looking for a move towards 143.25. But I think that would likely still be a major opportunity. Momentum also just turning down as price action fails to even get out of the neutral zone, and is essentially hugging onto the lows. So that looks like a bearish reset to me. Same thing with daily RSI. This is not, again, or do we have hidden bearish divergence here? Just barely. It technically is present, but just barely. If we take out yesterday's low, then it will be confirmed, which is 130.63. Perhaps worth putting an alert there. In fact, I will. Fuck it. I won't do it. But if that does happen, I'd look for a move back down to like 122 region. What about Mrs. Litecoin? How's she doing? She's about the same as Butyrol, maybe a little bit stronger, relatively speaking. But same thing here. Momentum also just turned down. Daily RSI. Do we have the same sort of potential hidden bearish divergence here? Kind of, yes. Again, it looks like a bearish reset to me. Not getting the same sort of strength as Bitcoin did on those last couple moves to the upside, but still hugging the lows. I mean, this is just this is what the chart actually looks like. Stop putting on logarithmic scale. You don't need logarithmic scale anymore. We've had enough history in Bitcoin. We've had enough history in Bitcoin now where linear scale, I think, is relevant, especially if you're looking at any price action from like 2017 to where we are right now. Maybe if you look at it before that, prior to 2017, you might want log scale. But now that Bitcoin's been around for more than 10 years, we can use linear scale, and especially as the range kind of consolidates between this 3,000 level and about the $10,000 level on average. Okay, what else we want to look at? Let's go look at SPY. Let's do a little bit more of a deep dive here. So last week I said that if SPY closes below the 200 simple and 200 exponential moving average, then I would not be bullish. I would be overall bearish, looking for new lows. I don't necessarily know when those new lows will come in, but I do believe that we likely will attempt new lows, and I still stick with that. And I would be sticking with that, granted the same criteria, as long as we're closing weekly dildos, especially below the 200 simple at 264.5. I do believe that that we're going to come back down and test 235 at the very least, and probably another small bounce there, and then we'll kind of look at it from there. But as it is right now, pressure down here. Now, if we did close above the 200 simple, I'd look for a move, perhaps all the way back up to like 285 region. But this is a very similar move to Bitcoin as well, just a very vertical move off the lows. I can't be bullish on this as long as it's even below the daily 21 here on a closing basis, especially on an open and close basis, as we have seen a couple of fake outs among the general market indices. Well, this one technically an ETF, but it tracks SPX, so you already fucking know. Anyways, so yeah, I do think that this one probably does come back down to like 245 and then 235, and probably played another bounce there, and then better hope that one plays out back above 265. Otherwise, new lows, baby, new lows. Same thing here as well. We've actually never had major lows put in without bullish divergence. Not on a daily, but actually I believe on a weekly. All major lows have been put on, or actually no, not all major lows have been put on for a what's it called, a weekly bullish divergence, but market cycle lows have. Yeah, going back to 2008 and going back to 2000, both major crashes, we do have phenomenal bullish divergence, at least 2 drives, in some cases 3, coming out of those markets. And if we could go all the way back to 87, which I don't think we have enough price action history here for, if only, then I would imagine that we probably see it there too. And that would make 3 times, but unfortunately, due to the limitations of TradingView, we cannot see back that far. More importantly, I still kind of hold with that as long as it's working. And we did close monthly in SPY yesterday as well, and we closed right below the 55. Just a dick hair below 55 on heavy volume, on increasing volume nonetheless. And is that indicative of capitulation there? Perhaps yes. I mean, obviously we saw a little bit of capitulation there, but dipping our toesy-woesies back into the bearish control zone of this, that means that. And we also closed on new lows. No, sorry, we did not close on new lows as well. Okay, so this one actually could still have a chance to bottom in the 235-ish region. It's still a possibility, I suppose, but I'm not necessarily looking forward to it. Monthly Stokes have found all of their major lows, especially for this run right here at the edge of the at the edge of the bullish control zone, ever since going all the way back to 2008. So I do think that we probably come back down and test that region and put in a major low on it, as we have done right here, as we've done right here, as we've done right here, and as we've done right here. All phenomenal buys post 2008. Do we come back down to that trend line again? I think yes, likely, and I also think that we'll probably bounce on that one again. Here's the counterpoint to that. We'll just pretend that didn't happen. I don't want to see a fucking global financial meltdown. That would really suck. What else we want to look at? Let's go look at gold. Gold coming back down to 1590, as we said yesterday, was likely. Not a good monthly close here, actually. Really not a good monthly close. I do think that we're going to come lower overall. I do think that we're going to come down to like 1530, maybe play out another bounce there. But I'm not bullish and I'm not bearish on this one. I'm short term. I'm bearish here. Short term, I'm bearish, and I do think that we're going to come back down to like 1530-ish region. Long term, I am neutral-ish with a slight bullish twist just because of the trend, but massive long-legged doji dildo right here. I still think that this is one of the most healthiest charts in just the general landscape, no matter what market that you're looking at. And again, I'm not a fan of gold. I don't really care about gold, but it is acting as what you'd expect a hedge to act as thus far. But this is concerning. That close very concerning. From a momentum oscillator perspective, I do still think that. I would still say that more likely to err on the side of bullishness here than bearishness, but anywhere below about 1500, and that goes out the window, especially below 1475. That would be a very obvious swing failure pattern, and we're going to come all the way back down to like 1300 at that point. Jesus Christ, man! When I first started trading, I saw this thing go all the way from like 1800 down to 10,000 or 1100 right here. I traded GLD. I never traded actual like spot gold. In fact, I want to kind of check out what it's doing right now. How's this one operating? Yeah, didn't get as favorable as a close as spot gold. Interesting still, but technically a little bit of bearish divergence in play between this point right here and this point right here. So that is a little bit problematic. Not by a little bit, I mean quite a bit. So that would be the bearish view on this, but this is the ETF. You do want to be looking at spot gold for actual, for actual direction, I do think. Anyways, we already looked at Japan. We already looked at Germany. Let's go back to Bitcoin, cover this bitch up, and send them off. And then it's Twitch time, baby, which I forgot to talk about earlier. We're going to be doing Twitch, and we're going to be doing I'm going to be going for a new all-time record. The record so far is a 7 hour and 7 minute stream. I'm going for 8 hours, baby. I'm going for 8 hours, and I think that it can be done. So you're more than welcome to join on in. Anyways, Bitcoin right here, putting back on the blue boxes of death and decay. No, peace and prosperity. Haha, April Fools, go fuck yourself. Just kidding. But taking out the last 4 hour low probably even does this. 6250 or closing a 2 hour dildo below. Let's call it 6250 as well. I would look for a move all the way back down to 5950, 6000-ish region. Another blue box right in over here probably does have another short-term time frame bounce. However, assuming that bounce just doesn't get back above, let's call it 6350, this region right here, I would look for that bounce to get sold into, and then we can play out the actual downside coming all the way back down to the mid 5000s region. By the same token, if Bitcoin were to flip back around, take out the 30th of March high on an aggressive tick on about 6650, or especially in a more conservative way, closing 4 hour dildos back above about 6800-ish region, then I would target a move all the way up to 7300-ish region. However, I think that would just give us another, or perhaps give me another nice trade setup right there. Again, this is never financial advice. I'm not a financial advisor, but I do like a lot of things that I'm seeing in the market right now from a trading perspective. So at the end of the day, it pays to be a trader, I do think, as you're not going to be relying on the erratic moves and swings of this asset, and instead can just enjoy the volatility, as that is opportunity. I'm going to be signing off now. I want to wish everyone here a phenomenal day. It's been an absolute pleasure speaking with you in this very one-sided conversation once again. And again, man, I see a lot of the panic with what's going on in the world right now. I found a lot of security and solace in this community, and just kind of like, focusing on the things that we can focus on and change and keep on working towards cultivating these skills, of which I'm cultivating a skill in Twitch right now, which I'm really excited about, and also trading as well, keeping that sword sharp. Can't speak, and that makes for a very fun journey. So during this time, I hope that we can all come together over that. Anyways, like I said, I'm droning off a little bit too long now. Take care, and until next time.